Hello everyone, welcome to the next episode of the Execution Show. I'm super happy and super excited to have Mr. Sidhartha Mehra with us today. And today we're going to talk all things finance in the Execution Show. So first things first, we would like to thank you to take out time and join in on this. Welcome sir, it is absolutely amazing to have you and I'm looking forward to this discussion.
Well, thank you so much for having me today, Anurag. It is indeed my pleasure. And I'm super excited to have a conversation with you today on different aspects about finance and how it impacts the world in general and business, of course.
So I'm looking forward to it and I'm looking forward to it is a show, but I'm here taking on the student notes here as well. So as we do with every execution show, we take up one problem statement and we break it down into as much detail as possible and learn from it and solve for it. And we do that in great detail. So today, the topic or the problem statement that we plan to cover is understanding the world and business through matrix and numbers and running the business through matrix and numbers. Sir is obviously an expert of it. So before we go ahead, let me introduce Sir. Sir has previously worked with Barclays, then with General Electric Capital and managed about $1 billion over there. Then with Jupiter Capital in India and managed about 1,000 crores in fundraising over there. Teams. He's also been chosen as the top 10 CFOs in the country. So sir, we are super thrilled and it's a privilege of ours to have you on the show.
Same here. I look forward.
So sir, to start with the show, my first and very basic question to you. What exactly is matrix for a layman? What do you mean by numbers and understanding a business through matrix?
No, I think, Anurag, it's a great question. Metrics, and I use the term the world of metrics, is around us in our day-to-day lives. It is always there. We may not necessarily call it a metrics because we don't necessarily have all those technical jargons with us.
Okay.
But it is a very integral part of our decision-making process. Think about your day-to-day life as a father, as a head of the family. You are constantly making those choices, right? For any human being, right? You earn a certain income every month. What's the first thing you look at? Cost-income ratio or expense-income ratio.
Yeah.
What do you tell yourself? You say, well, I am not going to spend more than 70% in my expenses this month because I gotta have something else, right? That's your cost-income ratio, right? That's a more technical term that you use in the business world, but that's the choice you're making in your day-to-day life. Similarly goes for your savings, right? Every month you tell yourself, oh, I'm going to put so much money in mutual funds or in fixed deposits, or I'm going to do some sort of a SIP. What is the first metric you look at? Savings as a percentage of my income. That, hey, I got to save 20%, right? And there are enough and more studies that have been done. Those studies tell us that, hey, at least it should be 20%, 30%, right? In that. When you go to make that saving, what is that you're looking at? Return on your investment, right? What are you telling yourself? Should I put in an FD? I'm going to make 6%, right? Oh no, let me put it into a SIP. Maybe I'll earn 12% or 15%, right? Or maybe you're too greedy and you say, let me put it in options. Let me put it in futures. Let me put it in intraday trading. I might make 20%, 30%, 40%. But you're constantly thinking on your return on investment as a choice, right? So these technical terms, right, which we use in the business world are also impacting our day-to-day lives. In fact, I would say the other way around. These terminologies in the business world have been borrowed from your day-to-day lives, right? Let me give you a classical question to answer, Anurag. You know about Swiggy, you know about Zomato, right? And today you can probably spend $200, $300, get a good meal for yourself on Swiggy or Zomato. Now there is a choice in front of you. A lot of Gen Z
Yeah.
Audiences have that choice, and they're always thinking, should I cook at home
Yeah.
or should I order from Swiggy or Zomato? How do you make that choice?
The cost and the effort.
The cost, right? You say, if I get these ingredients at home, it's going to cost me so much. If I use my electricity, it's going to cost me so much. If it's going to be gas, it's going to cost me so much. What is better, right? This or that. Now, based upon that, you will come to a choice, right? You said a very interesting thing, which said the value of my time,
Yeah.
right? That 1 hour that I will choose to do cooking, right? Is that the best utilization of my time?
Absolutely.
Should I put a value to that time? Is my time worth 1,000 rupees? Is my time worth 10,000 rupees? And then I will make a choice, right? So obviously, more likely than not, you will say, let me go and do a Swiggy or let me go and do a Zomato, right? But here it gets interesting. If I was to tell you, now think about your health
Yeah.
and think about the long-term advantages or disadvantages of your decision, what would you say then?
Yeah. I'll say long-term disadvantage because of Swiggy ordering outside, but yes, I get. That's all I will say.
Right? And so suddenly your decision
Has changed.
is changing. It's becoming more blurred. Now you're getting a little confused. Isn't that what's happening in businesses as well?
Yeah.
When you look at these metrics, when you look at your payback period, when you look at your cash flows, when you look at value today versus value tomorrow, it is the same choices, same decisions that you are trying to make at that point of time, right? Now let me give you a twist to that story. Now that's already got blurred. And if I was to tell, hey, you have an option to hire a cook. It's going to cost you 10,000 rupees. It's an incremental investment you need to do into your product. Now, would you do Swiggy? Would you do Zomato? Would you cook yourself? Or you would have a chef at home to make the food for you?
So third situation.
Third situation. How will you decide?
That's true. So what you're saying essentially is matrix are numbers that help you make decisions.
Numbers that make you help decision. It is a way for you to understand numbers, to analyze numbers in a manner where it can enable your decision making process, right? Ultimately, it's about decisions, right? And in a decision, there are multiple variables you have. In this example that we took, where we spoke about short-term goals, right? When we started in this example, it was a pure monetary dimension, right? It is like in a business, you think in-house, outsourcing, right? You make those choices as in your own organization, right? Do I have a content team who's in-house, outsourced? Do I have a technology team which is in-house, outhouse? What is the efficiency, right? But now, I kind of got into the second example where now you're thinking, what is my value add to the customer, right? There, now your decision starts changing. I say, I need to be closest to my reader. Now, if I need to be closest to my reader, the touch point with my reader cannot be outsourced. I need to own it. I need to experience it. I need to define it. I can't leave my destiny in the hands of somebody else, right? But if you look at the third example, now you're kind of bringing in the larger society in picture, right? Where you're thinking environment, sustainability, governance, right? We talk a lot these days about carbon emissions, net zero, all of those things, right? So when you take all these variables into consideration, a metrics is then helping you understand what is the most optimum decision for you.
Sure.
Right? And what you need to understand is how did this world kind of came into play, right? Metrics, how did metrics come into play, right? So a lot of this evolution of metrics really goes down to the fact that if you go back in the 19th century, when the evolution of stock markets started taking place, right, where companies started listing on the exchange and it is happening, for investors who want to invest in those companies, now how do you make choices?
Yeah.
How do you make decisions? Or as a company, how do you reach out to your investor in a simplified manner, right? Where it is easy for an investor to understand what you are doing and how you are doing it, right? That is when people started thinking about metrics. That's when people started thinking about what they need to do, right? So a lot of the metrics that we talk about today, right, is an evolution. Maybe you go back maybe like 150 years, right, in time, when when people started talking about railroads, right? When the world of railroads came, even then somebody was making a decision to say, how much does it cost for me to lay out 1 mile, 1 kilometer of a railroad?
Yeah.
How much does it cost for me to operate that?
And how much
Right?
do you make?
How much do you make? He was thinking then also, 150 years back, right? Similarly, when banks came into play, financial services came into play, even they were also thinking about my loss ratios, right? For every loan that I'm going to give out, how much money I'm going to lose,
Yeah.
right? And that hasn't changed, Anurag. Over 150 years, it is still there. Yes, more sophisticated metrics have come into play. Yes, there is an evolution of digital era, which has allowed us to look at different new metrics, but the fundamentals
Still remains.
still remain the same, right?
Wow.
So that's the evolution that's happening.
Wow. So I think that's very helpful in terms of what you share about matrix and how it has evolved over time and how businesses borrow matrix from common life. I somewhere also sir is writing a book with us at Zebra Learn on matrix. So what got you so involved? What's been your journey, sir, that got you so involved and invested? What was that moment in your life that you think got you so invested in the journey of matrix and optimizing and made you very passionate about following the route of matrix?
So, I have been working for over 2 decades.
Yeah.
Spent a lot of time across geographies, across different business cycles, economic cycles, and with a different set of leaders. Each one and each situation drove you towards looking at a different set of KPIs or benchmarks and metrics, right? Suddenly, year 1 something is important, and year 3 something else is important, and you always wondered, right, that nothing is static in that sense. And when you are starting your journey as a finance professional or as a young entrepreneur, it takes time to learn all these things.
Yeah.
Right? There is no ready book which will tell you, look, on a time scale of T0 to T10, at T1 look at this, T3 look at this,
Yeah, that's not
T9
gonna
look at it.
happen.
It's never going to happen.
And it's also
right?
different for different industries.
And it's different for different industries. It's different for different leaders.
Yeah.
It is going to keep changing, right? But you don't need to be lost in that journey. You need to quickly be able to adapt and understand as to why what is important at this point of time. And as you grow as leaders, somewhere somebody is expecting you to provide that insights, right? So I thought maybe this is a good time for me to kind of at least try to bring that experience into few words.
Yeah.
and try to share that
Yeah.
with a larger set of audience through you and through your organization.
Thank you. Thank you. So when I was going through your book and also was researching a bit, there is a topic of vanity versus sanity in matrix. So what exactly do you mean by vanity and vanity versus sanity in matrix?
Yeah. Anurag, do you watch movies?
I do.
Very nice. In your world, in your definition, when is a movie successful?
For the longest, it used to have 100 crore box office number, used to be that number. Yeah, I think
Yeah. So top line.
one is the large part is top line.
Top line, right? So top line.
Commercial success, yes.
Yes. Friday collections.
Probably those are indicators for top line.
Top line, yes. Uh, have you seen the movie Sholay?
Yeah.
Would you call it a hit? It didn't meet your criteria of 100 crores.
100 crores it did not, but relatively at that stage,
It didn't do well.
yeah, so, yeah,
What about Andaz Apna Apna?
yeah, same.
Same. But let's take a more recent movies, right? There was a movie that came, I think it was Thugs of Hindustan. Amir Khan. Did you
Okay.
watch that?
No.
It collected some 300 crores.
Okay.
More than the 100 crore mark
Yeah.
that you defined. Is it a hit or no?
It like commercially, yes.
Commercially, yes. Now here is the challenge. You didn't ask me how much did it cost to produce that movie, right? Or there was a movie. So a lot of movies come these days which have amazing openings, right? 20 crores, 40 crores. They go as quickly as they come, and sometimes they hit the top line of 200 crores, 300 crores, but the producers still lost money because they did not recover their cost, right? Nowadays, before a movie is released, right, you have all these trailers that come
Yeah.
out, and you have these paid screenings that happen. Everybody's walking out of the show
yeah.
theaters and saying, best movie, right? I have never seen something like this, right? Who knows this is a paid promotion, right? You have views on your trailers, you have views on Twitter, hashtags, all of that. Maybe it's being done by a chat bot.
Yeah.
Yeah,
Used
right?
to know.
Right. Metrics, there is a certain set of metrics that we are looking at. Why are we looking at? Because 50 years back, 20 years back, the concept was golden jubilees, right? A movie that has been running for 50 weeks, a movie that has been running for 25 weeks, right? But then came the world of this whole digital media, right? In digital media, you had new social media tools like YouTubes and Twitters and Facebooks, where you could create a much bigger hype about the product. But at the same time, there was something interesting that came, right? Which was your Netflix and Amazon Primes and all of those, right? Which essentially changed the dynamics of the industry, right? Now, when you look at success, right? To me, right? As a film watcher, I would say an Andaz Apna Apna is a hit, because even today, I may have watched it 10 times.
It's relevant.
I'm still okay to watch it for the 11th time, right?
Yeah, it's relevant.
For a Netflix, right, as a tool, it is not about, whether you switched on that movie, but did you actually watch that movie or not? Did you stay on that movie or not? It is a very funny story, when people, especially in North India, right, when you go to Delhi and all that, in summers it gets extremely hot, right? And you need a nice environment to chill out and sleep. What do people do, right? They go to the movie hall and say, oh, I want to have a sleep for 3 hours, right? Now, who knows whether he was watching the movie or not watching the movie, right? Now, you'll start appreciating the difference between different metrics that are being tracked to understand whether I am following a certain set of metrics to define a success of a movie because these are nice, right? If I say, a Salman Khan movie had a 100 crore weekend, nice, no? Feels good from an ego perspective, right? But it may not be the right metric to follow because it didn't even recover its cost, right? So the whole idea of vanity and sanity, right, from is a phrase that comes from your day-to-day life of how you are making choices and how you are making decisions, right? And one has to know that am I falling in the trap of vanity metrics, or am I actually focused on what really matters, right? The person, I'll give you an example to make that point, right? Do you have pets at home?
No.
Is anybody close to you has pets? Yeah. Have you ever seen a dog or a cat as a pet?
Yes.
Do you think they follow a metric?
No.
No. When they want something,
They cry.
right? When they want their treat, don't think they know a metric that who will give me that? Who should in the family I go to get that treat, right? There is a metric they are following. They're keeping it very simple, right? They are not complicating their lives, right? Right. Similarly, it happens in business. Nowadays, our economy, our country is booming with startups, right? And it's a really, really good thing, right? Eventually, all these startups or some of these startups will become big enterprises, make meaningful businesses which are sustainable, profitable, scalable. But there is a journey to go through that. And in that journey, some people will focus on the right things, and some people will follow things which look at least good on the face of it, but may not be necessarily helping you create a sustainable, scalable, profitable business, right? The classic example of that is social media, right? You launch a new product, you launch a new website. What do you tell your teams? How many people visited my website? How many people came to my YouTube? How many people came to the LinkedIn, right? Essentially traffic.
Yeah.
Right? Essentially about eyeballs, right? And you can easily get carried away and say, well, last week I had 100,000 eyeballs. This week I have 120,000 eyeballs.
That means
Next
nothing.
week. Yeah, it may mean nothing because it may not necessarily translate into something which is meaningful for your business, right? That are these guys actually buying from me?
Are they good people that
Are these people the right kind of people who are going to vote for me?
Yes,
Yeah,
true.
going to pay that $1, going to pay that 1 rupee to buy my product. Right. And if you keep following that, eventually, right, that becomes a vanity matrix.
Yeah.
Right? And that will take you away from a sanity matrix, which will essentially define the real future of your organization.
Got it.
We recently went through elections in our country last year, right? And if you look at elections, right, there are so many YouTube shorts, so many Twitters and X and all of that, right? Everything there is trying to make it viral.
Yeah.
Yeah. Whether it is through paid promotions, whether it's through chatbots and all of that. But is that really translating to votes? Are that bots going to go and vote for you in that polling booths? Right? may not be the case,
Yeah.
right? Certainly not the case, right? But it is making it look good, right? Now elections are not run on rallies.
Yeah. Digital.
Elections are not run on how many rallies did you do, what area did you cover, how many people came to your rallies. Now it's very data-driven approach, right? The amount of metrics that they look at to understand each geography, each region, to understand their, voting patterns is different, right? So this is what drove me, right, to essentially say that how can we help our readers in understanding that let's not get carried away by a metric which
Got it.
may look good on the surface, but it is not solving your medium term, long term goal.
Got it. Got it. So essentially, what you're saying is that selection of metric is actually the key part outside actually what the metric is, because at times you might be looking at metrics that might not be relevant to your business, and in that, by the process of selection, you might be headed in the wrong direction just because you're looking at the different thing. So that helps us understand the vanity matrix and sanity matrix. Uh, Going forward, so there is a business, a young business, trying to probably a 10 people team to maybe up to a 50 people team, and they're trying to implement a they're trying to get their business together, bind it together through all these metrics, and so that they are ahead of things rather than chasing them. So in that case, what is your, like, how would you approach this problem statement if a small to medium business has to implement the matrix and I'll share an example. We recently started working on a KRA KPI program for our employees, so that we get an understanding of what everyone is looking at. We had not done that till about 50 people team. So in that process, what happens is there's a cumulative inefficiency within the organization, because different people are looking at different things, and that too not measuring their outcomes against a budgeted input. So in that case, if a young business has to borrow from you and start working on matrix that identify different parts of their business, how would you approach it, like as from absolute scratch?
Right, right. A good point, Anurag. And let me first start by saying that nobody, and I mean nobody, has a magical answer
Yeah,
to
true.
these things. And there is no one size fits all,
That is also true.
right? Every organization, when they are defining KPIs or the key performance indicators, needs to first answer to themselves few questions,
Sure.
right? What is the vision and mission of this organization, right? You got to have clarity.
But does that happen on day one?
Well, at least you have a vision.
Sure.
You have a mission,
Yeah.
right? You may not necessarily know how you're going to go and achieve that, what is the exact path to get there, but at least you have a vision and a mission. The second is you define your value system. You define, right? Because the value system will define the culture of the organization, and culture is essentially going to define your operating system within the organization, right? That's the second piece that you should look at. The third piece is you should honestly ask yourself is what success means to me.
Yeah.
What success means to this organization.
So that you can optimize on
that you can optimize, right? You can have a small business and you can say, you know what, my biggest objective is to optimize on my return on equity, right? Lot of traders in the Indian ecosystem who have their own shops and all that, they're always trying to optimize on their return on equity. right? There is a set of people who may have a slightly different perspective and say, you know what, I don't necessarily want to optimize on my return on equity. I want to have a much wider reach to my customers. A third person might say, for me, at least for the next couple of years, what is most important is to delight my customers with my product, with my experiences. It is that, right? Now, in each of these cases, somebody is making the effort to define what success means to them, right? Now, when I spoke about vision, mission, and I spoke about the values, right? And I spoke about them before I spoke about success, because the success and the definition of success has to be within that framework, right? If you want to achieve your success, but the success is going to come from compromising on your values, right? Is that still a success for you?
Yeah, that's not going to happen.
That's not going to happen, right? So you got to define that. In doing so, right, we all try to borrow templates, right? And where do we go to borrow templates, right? We would always look at successful organizations who have made it big in their lives, right? And we would want to see what is their KPIs, what is their KRIs, how did they define different metrics and all of that, right? It is a good starting point, but one should not get carried away with that, because they are not at the same stage of the journey as you are. Right? So you got to make adjustments for the fact that there is a much more matured model. The business is at a different stage now than where you are, and therefore you should not try to replicate it like for like. It is not going to happen, right? Second mistake that we make is we don't appreciate and understand our industry and our customers, right? So if you think about, let's say, a Swiggy or a Zomato, right? They are network businesses. They are trying to create networks, right, of large people, right? But compared to that, right, a publishing business is a very different business, right? Even if you want, right, while you may have a vision that I want to be a go-to choice for the billion people in this country to read, the fact is there is no billion people who are going to read and who are going to be passionate for a continuous learning mechanism. So trying to chase that metric is going to be a wrong thing to do.
Got it. No, I think how you go about it, that really helps me picture and understand our process. As you were saying, in my head, I was visualizing the process that we kind of internally have tried to follow at a much smaller scale. That is in terms of going to an outcome and then reverse engineering what needs to be done to do that. For example, let's say we aim for a certain number of copies sold. So to do that, how many books should we publish? Then how many books, for that, how many authors will we need? How many authors will write how many books? Then how many customers or traffic do we need? What is the cost of that traffic? So as you were saying, those are all things related to the values, and probably not directly values, but what outcomes we are trying to achieve, what are we trying to build, what is the vision, and also what ways are we ready to take and what ways are we not ready to take, and things like that. So I think that helps you understand. What to look for, and if to look for what you're looking at.
Right.
So in this, while explaining this, you took a lot of examples where different companies are trying to solve for different things. For example, someone is trying to optimize for return on equity. Someone is trying to optimize for customer experience. So if we go through certain key departments, what should some matrix look like, so that and for smaller businesses, so that they can picture in their heads what do they need to track. So one, what are those matrix? Second, how do you generate or collect data? But I understand collecting data is a very broad and it's a very case by case specific, very specific need based requirement. So first things first, let's just start with different departments. How should they look at KPIs and what should be their metrics that they track? For example, finance team.
Right. So, as you rightly put it, Anurag, the definition of a KPI starts with what you're trying to achieve, and then from what you are trying to achieve or what is the measure of success, you are trying to then cascade it down, right, into what I call as some of the input metrics, right? That you're essentially trying to say that if these ingredients are right, if these inputs are right, then the likelihood of my output being right is very high.
Yeah, true.
Right? That's the basic philosophy that you're trying to follow with this. Right? Now, in doing that, right, when you think about different departments within an organization, you will think about a tech team, and you'll think about sales, marketing, BD, operations, finance, customer support, etc., etc. There is a functional way of looking at things, and there is a business way of looking at things, right? The first and the foremost thing you got to assume or you got to ensure is that functional KPIs are not divergent to what the business goal is, right? And is that aligning to a business goal?
Yeah, so there should be a common goal.
There should be a common goal. There cannot be multiple definitions of success. Because the moment you start defining multiple ways what success means, the likelihood is that if, in like you took your example, you said there are 50 people in the organization, there is a probability there will be 50 different definitions of success.
Yeah, and each firing in different directions.
Each firing in different directions, right? For a young business, right, should you be defining and cutting it so deep that, hey, this is what finance function needs to do, this is what sales function needs to do, this is what an ops team needs to do, all of that, right? While they may get so obsessed about that, that they're missing the bigger picture.
That this is a means to an end.
That's a means to the end, right? While it might be true for a very, very large organization, but may not be very true for a small organization, right? So, for example, and this example hopefully will help you understand that when you look at some of the large listed companies who have been around for 20 years, 30 years, 50 years, whether it's your Tatas and Reliance and Mahindras, right? The metrics that they are trying to optimize is what is the growth year over year? What is the return on equity? What is the price earning ratio? What is their EPS? What is their dividend yield? All those metrics, right? Does any of that mean anything to you?
Yeah.
Nothing.
Yeah.
Right? As a business, right? For you, the metric is growth rate of 10% means nothing.
Yeah.
Right? I need to have a growth rate which is 40%, 50%,
year on years,
100%, right? For you, the most important metric is what's my cash runway, right? How many months do I have to survive? 10 months, 12 months, 15 months. What is my burn rate? How much burn I'm having today, right? And that defines what my runway is, right? So suddenly, the metrics is different, right? So when you think about your sales team, when you think about your marketing teams and all of that, first of all, make sure these are the two goals, right? Don't try to do too many KPIs in the business also. I generally say 5 is a good number.
In the whole business.
In the whole business. 5 KPIs. You are following those 5 KPIs and everybody's aligned to those 5 KPIs is clearly means this is the definition of success.
So every person, so what you're saying is there should be 5 top KPIs and then there are departmental KPIs and individual KPIs that are leading to those 5 KPIs.
that are leading to those 5
So for
KPIs.
us, for example, we optimize the number of books published, number of users on the platform, and time spent on the platform by these users and or readers, and number of learners, number of readers that we have on the platform. So every other metric you saying should be reverse engineered to these
to
three.
these things, right?
And should one try to put a
when you
number
say
to it?
number of books, right? So number of books, yes, absolutely, right? What gets measured gets done. Don't leave it ambiguous.
There's a total number of
Yes,
books. It should
right.
be, let's say, 100 books by end
It's-
of this year,
It's
whatever.
100 books, right? And that's in the framework. And the reason I keep going to framework, you can publish 100 porn books and you can sell millions of copies, right? But is that the success definition for you? Is that aligned to your value system? No, right? It is easy for you to, let's say you are in financial services, okay? And you said, look, my objective is to have 1 million people in this country have credit cards, my credit cards, right? Right? How long do you think it will take you?
5 years.
5 years? I can do it in 1 day. How? I will not check their credit scores. I will just go out and distribute it to everybody.
And particularly to the ones who are not getting it.
Particularly to the ones who are not getting it. Right? And so somewhere in the department, let's say you told the sales guys and said, hey, your target is to do 1 million credit cards, but they didn't understand the context of that 1 million and start chasing that 1 million left, right and center, right?
That
At
effort
the end
will-
of 12 months, they will make sure you're broke.
Yeah, because that effort will be wasted.
That effort will be wasted. You will lose a lot of financial strength in the organization, right? So as you work with the various departments, let's say you are telling them, I want to do 100 books this year, right? Break it down into a more tangible goal, which is saying, I want to do 10 books a month, right? I want to do 2 books a week, right? This is how you have to define. And the entire governance framework around it is well established, right? So the more you simplify it for the people, the probability of them aligning to those goals
Go up.
is better, right? The point I was making, Anurag, is that you would have met with multiple founders and you would have had this conversation with them in different forms and ways. But you would have seen there are 2 schools of thoughts. There will be a certain set of founders who will say, in a small, young business, what is the point of over-engineering and getting too much obsessed about metrics,
Yeah, exactly.
right?
And that was me for a very large part.
That's me for a very large part, right? That it doesn't make sense.
Yeah.
You know, I know everything at the back of my hand, and why do I need to do
This
that?
feels like, I'll tell you how it comes across in the initial bits. You want control over data, but one, you don't know what exactly how to build that layer on top of it. So you need to train yourself. And second, that cost of training and building is so high that you think I might rather focus on things that I know of and that can grow the business tomorrow.
Yeah.
And that is what leads to friction. And then obviously once the business scales, you're not really left with us, and not even scales. Once it's even more than 20 people, you're not really left with a lot of choice, because then you can't be on top of everyone's work. So this is the only way to be at.
Yeah.
So, so far, sir, we've been talking about organizational KPIs and 4 or 5 things that the entire organization should be looking at. Now, let's go again into deeper department-wise matrix that one may look at. So, to understand what matrix look like under different departments when one is trying to implement it or trying to understand it better. So, what are some matrix that or some numbers that you think one may look at? And to do that, we can even take an example. So first, let's take the example of ZebraLearn itself. So I'll tell you what teams we have, and according to you, what should be the matrix that we should be looking at, and so I think that should be a good exercise, and that should give everyone a context into what we do. So we'll start with we have a team called publishing. Publishing is the one where all the content from authors come, and it's made in a way which is readable. So writing, editing, design, all these things are done at this. So what do you think should be the KPIs here?
Got it. I will first ask you, what is the definition of success for your publishing team?
To roll out enough number of books in time. Those are
Right.
two aspects. Now, enough is something that keeps on changing with time as the base grows. And in time, we wish to roll out books in about 4 months. So those two things should happen.
Sure. So you're saying my first metric is number of books, right? So let's say the target is 100. You break it down by week, month, etc. That becomes the first target for them. The second target you said is the turnaround time, saying that from start to finish, it should not exceed 4 months, right? That becomes the second metric that you would measure the publishing team on, right? Now here is a third one that I throw in your direction, that while the first and the second is focused on volume and quantity and timelines, there is no dimension of quality,
Exactly.
right? Now, if you were to think about quality, right, how will you measure quality for a publishing team? Right? Will it be, right? And I'm just throwing some
Sure.
ideas, right? Will it be based upon number of copies that have been sold? Right? It could be very well be that. Because
That's
the more
not, that's not the best indicator, because some markets are generally bigger than other markets.
Okay.
For example, a book on Facebook ads will by design sell more as compared to a book on consulting.
Right. So you're saying, well, I can't rely upon
Yeah.
this as a metric.
Correct.
Can I define the customer's time
Yes.
spent on the book, right? How much time the customer is engaged on the book.
Yeah.
If it is online, it is very easy,
Very
right?
easy. We do track.
You can track that. But if it is not online, then you have a challenge, because physically you can't measure that dimension, right? But online, that would be one way of measuring the quality. The third way of measuring a quality could be just simply based upon the the customer reviews,
Yeah, exactly.
right? The scores, right? On a scale of 1 to 5, you need to have minimum of 4, for example, or you need to have minimum of 4.5. And then you can do some sentiment analysis
Correct.
on top of that to determine the quality dimension of that, right? So that to me will become a third metric. Now, whether you choose A, B, C in that, it is a function of complexity. It's a function of data. It is a function of ease of use,
Correct.
ease of understanding. You have to take those parameters into account.
Yeah.
And from those parameters, you will have to define what is that right metric that I can use now. 2 years down the line, maybe there is another metric
Yeah.
for quality that you can
Correct.
use. But today, that may not be the right metric.
Correct.
Right? The fourth metric, right, is ultimately publishing teams are not working in isolation.
Correct.
There is a lot of cross-functional work that is happening. I don't understand your industry so much,
Sure.
but I understand there will be some sales guys and some BD guys. There will be some editorial teams. There will be some technical teams who are helping out in certain dimensions, right? Now this stat, which is a 4-month from start to finish, right, will eventually become like a co-goal across teams. Now you can't state a goal which becomes unachievable, unattainable for the publishing team just because they have a dependence in the value chain.
Yeah.
And unless those interdependencies are not being solved for, right, you can't penalize them.
Got it. Got it. I think very close to what we do. Amazon reviews is what we track for quality, and so that gives us perspective on publishing. And for anyone into manufacturing, uh, or anyone into service industry, or anyone into, I think similar parallels can be drawn in terms of how they can think. Again, publishing is a very different industry from manufacturing and service, but on similar lines you can think and create KPIs for yourself, and then within that I will have KPIs or matrix for every individual as well, which will not be reported at the larger at the organization level, but there will be a writer who will have their own set of matrix. So how many words are they writing, how many how many edits do we need. We have an internal tool called QC check, so what is the average readability on that. So all those things. What do you think, sir, should be the matrix that the tech team should have?
It's one of the hardest ones.
Yeah.
Because, tech teams in each organization are configured in different ways.
Yeah.
Some people just purely call it a tech team. Some people have functions within them which are like engineering.
Sure.
Some people have new launches, new releases, new products. Some have product marketing,
Yeah.
which is very much part of the technology team. They do and take care of the whole digital online marketing piece, right?
Sure.
So if you speak purely about digital product marketing, right, digital, then obviously you are looking at a lot of metrics out there, right, in terms of your reach, in terms of your conversion, in terms of the effectiveness of each marketing campaigns, right? So essentially everything that is around customer acquisition cost, right, and customer LTVs, right, their long-term values, right? So in there, that's how you will go down that path. Now you can define that to the T, right? How many people came on each day? How many people came at each hour? What kind of engagement did they have? How is that growth rate growing day over day, week over week, etc.? Which regions, right? Because sometimes you may want to focus more specifically to a cohort of customers, or to a specific regions within geographies within the country, and say, hey, I want to specifically target on these spaces, right? But if you keep that piece aside, which is more around customer acquisition and marketing, right? Technology, at the end of the day, is an enabler.
Sure.
Yes, it's a very important enabler, but it's an enabler. So therefore, you need to always look at that KPI in the context of the recipient of that enablement, right? Now, if that enablement is to an end customer, then you're really thinking about the UI and UX, the customer journey, right? How delightful that customer journey was, how easy that customer journey was, how nice that customer journey was. If it is for internal teams, right, it could be for your BD team, it could be for your publishing team, and so forth, right? Then what you really are trying to measure is from the ideation to the completion, right? Is that happened? What we were thinking was going to happen, and has it happened in a defined time period?
Sure.
To a certain level of accuracy, right? Do I want to necessarily, think about productivity, efficiency, cost per employee within my tech team? Cost per employee within a tech team is a very interesting phenomenon. And I'll take a pause here for a second to help you understand what it is, right? Tech now is a very integral part of everything that is happening in any business, whether it's your a business of publishing, or it's a business of travel or room bookings or ordering groceries everywhere, right? And let's say the cost of a software developer, right, is, let's say, 50 lakh rupees, okay? But the businesses where that cost is being deployed is different, which means the profitability of each of these businesses is also different. There could be a business with 70% gross margins, and there could be a business with a gross margin of 10%.
Yeah.
You are deploying the same cost of 50 lakhs, right? Now, a business with 70% gross margin can afford that cost, but maybe a business with 10% gross margin can't. It will struggle with that, right? So therefore, it is very important when you think of those underlying costs and the type of resources and talent that you are leveraging, right? It has to eventually make sense in line with the unit economics of an organization, right? Second piece I always tell people is there are certain functions within an organization. Everybody should not be painted with the same brush. Okay. The way you look at an ops guy or an ops team should be different from the way you look at a BD team to the way you look at a tech team. Everything being constant, right? In your organization, probably the tech team carries the highest level of innovation and creativity.
Sure.
Right? Because what you're really asking them to do is imagine the future, build for the future, right? And go around that. Now, if you want the DNA of those people to be innovation and creativity, right? Then one should not use the metrics which are for operational efficiency, productivity, and so forth. And vice versa for your operating teams. An operating team is meant to be an operating team. It needs to give predictable outcomes to your customers, right? You can't create ambiguity around it. You can't create that if I call up your call center, I don't know whether your agent on the other end is in a happy mood or in a sad mood, and therefore it is going to change everything, right? It needs to be predictable.
So from what I could pick up from the conversation, there are 3 layers to building matrix for an organization. One is obviously the organizational matrix, 3 or 4 or 5 of them. You go down departmental wise based on the nature of the department. You pick and choose what should be the matrix, and those matrix should directly be contributing to the organizational matrix.
Correct.
And put together maybe 5 departments. The cumulative effect should be such that it meets the overall organizational targets. And then within departments, you have team members, individual KPIs, or individual members where you are building numbers or matrix to track which contribute to departmental KPIs or departmental matrix, and then it goes further to contribute to the organizational KPIs.
Absolutely.
So at the whole,
align it with your investors, align it with the external
with
world.
all the external stakeholders.
Yes.
So this is essentially what makes the numbers governed by what makes the business actually governed by the numbers. And then what is happening is, if your organizational KPI or matrix is broken, you can dig deeper into which department is responsible, did not perform, and further problem solve into, or dig deeper into which team members, or not individuals, but which kind of profile did not perform, or the numbers were wrong. Maybe you could go wrong in budgeting as well. Maybe you thought that someone could do 10 units of something, but only 4 units. The average between 10 people is 4.5 units. So that is where the budgeting also goes wrong. So that sense, the numbers, then you're not governing the organization as a founder, as a leader, as a CXO, as someone who manages the organization. You have left it now to the numbers and processes and people doing it.
Yeah.
So
3 things that I would like to add here, Anurag.
Please.
Is certain do's and don'ts. Because at the highest level, it all looks very simple and all looks very achievable, right? But when you go about implementing
Yeah,
these
absolutely.
things, you face a lot of roadblocks and hurdles in doing these things. First of all, there is always a possibility, and there will always be a possibility that there is a conflict within KPIs
Sure.
or a conflict within your input metrics.
Okay.
The organization, the founders or the leaders should be clear in that situation what wins, right? So, for example, you have, let's say, let's take a calling agent as an example, or a calling team as an example, and you say every call should end within 180 seconds. This is your KPI. You got to be 95% above this to happen, right? Calling team, right? Or at the organization level, I created a goal that my customer NPS cannot go below 4.8, right? Now I got some disgruntled set of customers, and this agent is kind of looking at, oh, it's 180 seconds, I gotta hang up, and I hang up, and my customer NPS drops, right? But the agent doesn't know between these two what is more important.
Yeah. No one does actually.
No one does, right? But the leaders and the value system of the organization will define that. What is more important? Was time the more important thing, or the customer NPS was the most important thing, if a situation like this arises for us?
And it is likely that it may arise.
It will always arise. If life was so simple, then robots could do all the work, but it is not like that. The second piece that you need to remember is, as a leader, you got to walk the talk.
Your numbers should
Right? It cannot be that you are laying this whole philosophy about KPIs and everything within the organization, right? But, right, when it comes to you making choices and you making decisions, you completely ignore it, right? Then you're not walking the talk,
True.
right? And people are smart. That's one assumption we all can make, is people are smart, right? They can figure it out, that it is like a game, but it's not necessarily happening, right? So you got to do that. Third is, when you are defining these KPIs for yourself, always, please do a benchmarking exercise.
Yeah.
Right.
Across industry?
Across industry, with companies of similar nature, similar size, similar cycles, similar geographies, always do a benchmarking.
Because you could be very off.
Yes, you could be very off, right? You could be off both ways,
Yeah.
right? And that either ways, it's a recipe of disaster,
Yeah.
right? So therefore, I always say, and this has been one that I have also in my life tried to imbibe all the time, is benchmark. Benchmark where we are, benchmark where we need to be, so that we can understand our goals, aggressive but attainable. So, that dimension of benchmarking is very, very important. Last piece that I think, again, it's part of the do's and don'ts of when you implement these KPIs and dashboards and metrics, whatever. It is not to pinpoint a person.
Yeah, exactly.
It is not to say you performed well or you performed wrong. KPIs are basically meant to understand trends, is to understand underlying behaviors, opportunities, or challenges. And essentially, so you can do organizational intervention in those things. Right? If we can follow these like 4 things around this, I think we can have better outcomes in these dimensions.
Absolutely.
Right?
And then it becomes a very governing organization by itself. It becomes to grow strong internally as well.
Correct. Absolutely.
Yeah. So I think, sir, that has been really helpful in terms of understanding matrix and how they work and what is the role of it. How it can govern an organization, how it can pinpoint gaps, how it can pinpoint strengths, and how it can pinpoint things that we need to work on and fix, and so on and so forth. So with that, I think it has been an absolute wonderful conversation. I've enjoyed it thoroughly. I've been a student through most of it, more than anything, and I'm sure our readers have enjoyed it thoroughly. So thank you, sir, so much for sharing your wisdom, sharing your experiences, sharing your journey with numbers. So thank you so much for taking out time. Would you want to say something as concluding remarks to everyone who has heard it so far? And second, we also have a book with sir coming up very soon. By the time you read this, it will be in the market, or it might be in the market after a few months. So accordingly, check it out on the website. So, sir, anything that you would want to say as concluding remarks, one, and second, an introduction to the book.
So, thank you so much, Anurag, for having me here. It's a privilege and it's truly an honor to be here and having a conversation with you. Like you, I've also enjoyed this entire conversation. I would request all the listeners that as and when you and your team get the book out, they should all go out and read the book. I have tried to make an honest attempt in sharing different dimensions and different experiences that I have gathered over my life, and it's taken me that long to get there, is if I can help even some of them in expediting and accelerating their journey, I think the purpose of the book would have been certainly accomplished.
Wow.
I just want to tell people that this whole concept of vanity versus sanity in the world of metrics is applicable in our everyday lives. Every choices and every decisions you are making, it is there. And try to see if some of the stuff that I have shared in the book can help you to make more efficient, more productive, or more rewarding choices in your life as you go along. Wow. So thank you very much.
Thank you so much. That's a great description of the book. So guys, as we wrap up this session on the execution show, remember the value is not in the discussion. The value is implementing this. The value is when you practice this, take this with you and give these numbers, give matrix a try at smaller things that you do, and if you lead or manage organizations, on the larger things that you do. And that is where we'll derive the most value out of almost all episodes of the execution show, and particularly this one, because it talks something that is so generic and encompassing, covers almost all aspects of life. So with that, we'll take your leave. Do tune in for the next episode. It has been wonderful to conduct this discussion, to hear this out firsthand at the best seat possible. And we'll meet again in the next session. Till then, keep learning and keep reading and keep growing. Thank you.